Okay, we are now looking at the deferrals, and I told you what the journal entries were. So December 31st, there was a balance in the unearned rent of $360. So in the unearned rent, I got on December 1st, somebody paid me $360 for renting land that I owned, and it was for 3 months, for December, January, and February. At the end of December, I've earned 1 month. So always on an unearned, the first thing I should do, I know you know what it is, take the balance and divide by the 3 months. So I know how much per month. $360 divided by 3 is 120 per month. So what I'm going to do is I'm going to recognize the revenue of $120 at the end of December. I'm always going to debit the unearned rent and credit the rent revenues. Okay? The journal entry for unearned revenues will always say unearned rent debit, rent revenue credit, or it might say unearned fees and fees earned. Okay? But it will always be one of those two. So this is unearned revenues. So this is journal entry number 3 of the 6 journal entries. So almost we are 50% done already, guys, okay? And here's the slide. If I forget to do it, here's what happens. Revenues are understated, net income is understated. Again, just pay attention so you understand what this means. Do not test on it though. Okay, 50% done, 3 of the 6 journal entries. Let's move to prepaid expenses. Now, one of these you already know. It had to do with supplies, and we did it back in chapter 1. So on December 31st, the unadjusted trial balance indicates that I had $2,000 in my supplies account. However, during December, some were used, okay? But I still had some on hand. At the end of the period, I had $760 on hand. So I started with $2,000. I ended up with $760. So this is how many supplies have been used is what I want. So we've used $1,240 worth. So here's my journal entry for prepaid expenses supplies. Always exactly the same thing. Supplies expense is debited. Supplies is credited. Always, always, always. Remember, the amount you put here is the amount of supplies used. Okay? The amount of supplies that have been used goes here. Again, we learned how to do this journal entry in chapter 2. We actually came across it in chapter 1 when we were doing the spreadsheet. So you already know this. 4 of the 6 journal entries are completed. Okay? 4 of the 6 journal entries are completed. We are almost done, 2/3 of the way done. Okay, the second prepaid expense is insurance. So what happens with insurance is that I pay ahead of time for a whole year. So on December 31st, the unadjusted trial balance said that prepaid insurance had a total of $2,400. On December 1st, I paid $2,400 for 12 months of insurance. The first thing you should do is calculate how much per month. And then how many months did I use? So 2,400 divided by 12 will give me 200 per month. And at the end of December, which is only 1 month, I'm only looking for 1 month, here's my journal entry. Always the same. Debit insurance expense, credit prepaid insurance. The question is, how much? Debit insurance expense, credit prepaid. Again, always with these type of problems, you figure out how much per month by taking the total amount divided by how many months, and then multiplying it for how many months you're talking about. Okay? So this is 5 of the 6 journal entries done. We are almost done. Again, if you forget to do this, here's what happens. My expenses are understated and my net income is overstated. This is for both of these entries. So This tells you what happens if I forget to do this actual deferral. Okay, so this concludes the deferrals. The next thing we're going to look at is the very last journal entry, and it's on the next video.